Good day, everyone. Today is Friday the 14th, 3:22 p.m. Eastern Time. Before we start, we have a risk disclosure, and that's video for education purpose only. We will be showing today the difference on the new update between the scalping and the swing trading. So I'm gonna show some example today on the A scalper, how you can how you can scalp the market, and how we can trade the swing trade. And this is an example on a 300 tick, and this is not a market. This is not a limited price. This is a market order. When we go on a higher time frame, we can not worry about couple ticks slippage. And this is a 300 tick, which the 300 ticks on the gold is very good. And this is the same auto trade. Let me get this one out of the way. This is the same auto trade, and we can see on the swing trading we started at around 12.18, and here's your 12.18. So here is the difference between those two. We had an entry in the same time, and here is your scalper. It took a small trade, one trade, two trade, one losing trade, two losing trade, and then swing. Really nice, beautiful trend. But here is the things, a lot of traders, they don't get it, that we don't know when the market is going to spike. If it's going to spike around 8 o'clock, 9 o'clock, 10 o'clock in the afternoon, we don't know. And a lot of people ask me, what is the best time? We don't know when the market spikes. But when you start your auto trade around the opening hours, like 8:30, I will go with the trend. I will go on the swing trading when the market in the afternoon, like July and August, is going to be really flat market. A lot of people on holiday. So it will be an idea that when the market is a little bit flat, you can scalp the market and using the same auto trade. But what I would like to show, a lot of traders, they make a mistake, because the CL, not long time ago, we had a spike on the CL at 9:29, 1 minute before the markets open, and then went like 100 tick, 120 ticks, and then the rest of the day we were just watching the CL. Here there is something I would like to show you on any kind of instruments. Once we have a spike on any given market, usually the market gets flat for a while, and a lot of traders, when they see a good trade or when they are auto trading, they get excited, and now they want to stay with that auto trade, any auto trade, and they want to make more excitement out of it. And this is the biggest mistake, because if we look at this area here, usually after the spike the market go flat, and we can see the market from 8:32 to probably around like half an hour. This is normal. The market stayed flat. I mean, not much to do anymore. And then look at this, and this is a really nasty area to auto trade. So once you see the market spike and you really took the trade for today, that means you need to call it off, not to get more excitement out of it. And we can see the exit here, both of them. This one here on the scalping really got 1540, and on the swing trading got 1660. Let me show you another example between those two auto trade. The advantage about scalping and swing trading is depends on the market and what time you start in this auto trade. And let me show you another example today. I want to show you the this is the scalping on the 30-year Treasury bond, and this is a market order, and this is the 30-year Treasury bond on the swing trading, and it is the same auto trade with a different setting and a different exits, but the entry is the same both. Let's look at the entry. The entry is, 152.30, and this one here 153. Okay, there is a little bit different, but then we can see that climbing 1, 2, 3 trade, one losing trade, and one winning trade. This is 1, 2, 3, 4, 5 trade. Nothing here, nothing here. This is 5 trade, and this is a market order, and we had one losing trade. Let's look on the market order, not a limited order. On the 300, you can use a market order. And the things is, both of them, they have a target on 1,000. So this one here on the last trade, if the trade is in your favor, even if you have a target on 1,000, the market is going to stay. If it's going to your direction, it's going to stay on that trade. It's not going to lock that trade. And this is what happened exactly today. This is the benefits that took one trade, exit, pull back, re-entry, identify trend, and then probably by around this area here, we nailed our target. But what I would like to show you on that, you can see how the market went all the way down to the 52.29. This is the secret about it, really. And when the market pulled back, if you are using an ATR or a trailing stop, you would have got out of that game immediately, and you would have got out of the game right there. When the market was long, you would have been out of that trade here and settled down for practically there is no money in it. But the beauty about it, if we see the market went all the way down to 52.28, pulling back all the way up to the 53.03, and we're still in that trade. The reason is the trend is not over. And we exit at 52.18. So there is, from around that area all the way down here, we nailed extra on the $1,000 target, because this one is 1,000 and this one is 1,000. This one took 5 trade and this one took 2 trade and call it off. Let me show you another example also. So the advantage right now is when the market is a flat, especially around July and August, around the Christmas, Thanksgiving, all this is going to be a nightmare for any trader. You cannot swing the market when the market is flat. So that will be an idea for you to what time you started that auto trade, or if you start early in the morning around the opening hour, then we can swing the market. Or if we are in the afternoon, especially right now in the afternoon, there is no performance sometimes. So that will be an idea after lunch to scalp the market, or maybe you can use a higher time frame. And this one here is on the CL. No, we need another one. Sorry about that. Okay, there we go. This is the 3 range. On the top is the scalping, and at the bottom is the swing trading. And we can see they're both got in at 46.04, both of them. And this one here, scalp the market, 1 trade, 2 trade, 3, 4, 5, losing trade, 6, 7, 8 trade. And if we are looking at the 3 range, is 1 trade, 2 trade break even, 3, 4, 5 trade. And practically because of the last trade, it was a beautiful trade. and the swing trading kept on that trade, so it was a better exit on the scalping, because also the scalping have a two different type of an exit on the highs and the lows, or on the trend changing. So there is no ATR, or there is no dummy indicator involved in here. So this is also, I like to show you that because of the last trade, it was a big drop, and then we nailed it. But if it was not that big drop, then the swing trading would have made it. The one factor in here, that when you are on a lower time frame, when we were using the 300 ticks, we can go market order. But when we are using three range, the three range is an excellent, but also it is how to say that, it is much smarter to filter the noises by using a limited order. And this is the difference between a high time frame and a low time frame. And another things, it is very important also for guys, when you are using the three range as an example, it is very accurate with the exit, because both of them, sometimes they can exit and dump the market if the trend has changed. And doesn't matter if it's a break even, plus minus one tick, it's going to dump that trade. As an example here, we took the trade at 46.65, and then we got out at 46.59. So this is 4 ticks. Everybody can afford it if the direction has changed. So if we are looking as an example on a 230 ticks, I want to show you something that this is I mean, it's not a really big time frame, but it's not a small time frame, it's a mid-size frame. And we can see the entry was at 53.10 on the 30-year Treasury bond, and then exit at 53.08. Still is very acceptable. The things is with the auto trade, when we had the older version, we had people having a problem how to manage auto trade, when to start the auto trade or when to stop the auto trade. So now they have more advantage to nail those trades. Let me see another one. This one here is the 30-year Treasury bond. I think we covered the 30-year Treasury bond. I have so many charts open and I cannot find it. But anyway, on the 30-year Treasury bond is a 230 tick, 1 trade, 2 trade, 3 trade, and it was over. But this is now, I want to show you something very, very something today. And this was the best trade for today. If I can find anything, just a second. I want to show you the ES. Okay, I found it. Today also we are testing the 5 minutes on the ES. And this is a very interesting one. And we can see at 7:20. Look, this was really nasty earlier today, and in those area here, you will be better off with a scalping. Look, this is a very critical area here for any kind of auto trade. This is really. But anyway, if we look for today, we started at 7:20. The first trade, and we took 1 trade, 2 trade, 3 trade, 4 trade, and 5 trade on the 5 minutes time frame. On the swing trading, we have the same entry, 44.50, the first trade on the swing trading, and we are still in that trade. and the scalper at 44.50 and took 1 trade, 2 trade, 3 trade, 4 trade, 5 trade. So that tells you folks that, I mean, it's not going to be like this all day. I'm not trying to tell you that it's going to be every day, but when the market is going to trend, this is a very, very amazing. And another things I like to show you on the swing trade in here, and in that it is the details, the small details is the most important. We had an entry at 44.50, and then we climb all the way to the 48.50. But then if you notice on that one, we had a pullback not to the 45.75. If we look at the wick, we dropped to 44.25. 44.25, and the entry was 44.50. So in a way, this is a very, very important area here, and this is what is gonna make a huge difference in the trade, in the small details. And if we have the entry at 44.50 and you are using a trailing stop or an ATR or some kind of just a dummy indicator, you would have stopped out immediately within 3 minutes on that trade. Then the market climbed all the way to the 48.75, and the market dropped to 44.25, but you did not exit. Not just here, it was another pullback in this area here, 47.75, and then the whole day it is. So this is, maybe it's not going to happen every day, but that kind of trade is going to make a world of difference in your trade, because that kind of trade, if it happened, the spike with your trade in once a week, that can cover the whole week for you. What I want to do right now, I would like to know how much we got out of that trade. I'm going to go ahead and say close position, and I'm closing that position. And that one here started at around 7.25, and now I force close in that position, and now is 3:40 p.m. Eastern time, and it is Friday is over. Normally on Friday, usually after a couple of 3 hours, sometimes the market go in one direction. So this is an idea for Fridays. Sometimes it goes in direction one, maybe up or down, or everybody want to just get rid of the trades and start for weekend. And most of the time during the normal weeks, that you will find Fridays usually takes one direction, and this is a really good advantage to have one trade, beautiful trade, 150 ticks, almost 140 ticks, and this is where the market, it was actually a very nice day today. The market was running very smoothly, but this is my, maybe it's not the best one for today, but this one was the most enjoyable one for today, that's for sure. And if we look, those two, beautiful. And this is the difference with the new update. And remember, and this one here, market order, folks. It's not a limited order. This is a market order. When you are using a 5 minutes, 3 minutes, 300 ticks, you can easily 4 range, 3. I prefer on the 3 range limited order because that auto trade, you don't have any optimization and you don't need any filters with it. You don't have to use any filter. But at least we can clean the noises when you are using the 3 range. And this is a this one here, a clear picture how when the market is flat, or like those area here, this area here can really destroy anybody's account. Because, and here's the problem sometimes when an amateur trader trying to trade and he don't see any money coming in, the first thing he's gonna say, what's wrong with that auto trade? Because he's not looking at the chart, he's looking at the numbers. But on this one here, it is a total disaster. So if you have the scalper on, that will be a little bit nicer. And when you in the morning, when you want to start this auto trade around the opening hours, I will use the swing trading on a, doesn't matter which time frame. Now, if the market is in between, you don't know which one you need to use for today. It's not the solution, but it is better than nothing. Try to run both for 1 hour on a demo. Try to do that and try to see your trade, because by putting them on the demo for 1 hour, half an hour, if you see the market is trending or scalping, you can see the different how it is, or that will help you identify which direction you want to do. Most of the time, if you start at the high hours around 8, 8:30, 9, 9:30, that it is, I will use the trend auto trade. On Monday usually is slow. Maybe I will take the scalping on Monday, especially now in July and August. Personally, I don't like to be behind computers in August. Tuesday usually is a fine day. Wednesday we have the CL. You got to be careful how to play your games on the CL. Maybe early trade on the ES. Once the CL out of the way, the CL inventory, then maybe you can turn it on. Or the auto trade has a filter. Try to turn it off half an hour. It does it automatic. The news is already built in it. You just say half an hour before, stop trading, and then the auto trade stop trading, and then maybe 5 minutes after the news is out of the CL, then the auto trade will start, and most likely is gonna be trending after the news come out. So you can do that and use excuse me, you can use the swing trading. Usually I'm talking in general, on Thursdays they're usually very smooth day, and Fridays, if you are patient enough, usually it's very advisable to start a little bit early on Friday. And this is not unusual on Friday. I'm not saying every Friday, but it's not unusual on Fridays the market takes one direction on the last 3-4 hours. So either up or down, keep going down, or if it's going up and keep going out. The problem is also I love reversal, and on Friday when I see things like this, I don't reverse the market because if you're trying to reverse that market today, you would have been chopped. And on Friday, don't try to reverse the market, because it's not usually is going one direction. This is, I'm sharing what I have experienced, and everybody is entitled to their opinion. Folks, that's all what we have for today. I want to wish every one of you pleasant weekend, and see you another day. See you on the webinar on Tuesday. God bless you all. Bye for now.